The most common homebuyer mistakes are made when shopping for lenders and trying to compare which lender has the best option for them. I'm going to show you how to properly review a loan estimate and the easiest hack for comparing offers in under 2 minutes. It's crazy to believe that 75% of home buyers don't even shop their mortgage. So why would this be? Why is it that so many home buyers don't shop their mortgage? Well, for one, the most common thing I hear is they don't want their credit pulled by more than one lender. And they don't realize that they actually have a window of time in which they can have their credit pulled by more than one lender without it negatively impacting the score. So that's important to know. It's called the right to shop rule, and it gives you a 45-day window to shop lenders, mortgage specifically, without the subsequent credit pulls impacting the credit score. And I think the other reason they don't shop lenders is they don't realize just how easy it is to shop lenders. So, what should you be comparing when shopping lenders? Well, for one, you want to look at the interest rate, naturally. Who doesn't want the highest interest rate? Obviously, I know you want the lowest interest rate, so you want to compare rates. You also want to compare cost. Is there additional cost involved from that lender to get the lower interest rate? And of course, and I believe this is just as important as the other two, the service provided to you by that lender. And I mean more of a customer service aspect. Is that lender available to you when you need them, or do they shut their phone off at 5 p.m. because their banker's hours are over? Are they available on the weekends? Have they been able to answer all of your questions in detail and explain why things are what they are? Are you just a number to them, or do they know you by name and treat you like family? Those are things that to me, as a lender, are as important as the rate and the cost for the loan. So I want to walk you through how to properly review the loan estimate, which is the document you receive from a lender at the time you apply for a mortgage. I'm going to walk you through what you should be looking at on the loan estimate to compare one lender to another. Now, there's a lot of information that goes on this document that comparing lenders becomes irrelevant. Of course, it's all relevant when you're getting a mortgage. And you can watch one of my other videos that walks you through the loan estimate step by step, explaining what cost is what. However, in this video, we're going to focus specifically on the lender-specific costs and how to compare those to each other. So for one, your first page of the loan estimate is going to show you your interest rate and your monthly payment, right? So your interest rate, in this case, 7.625. Your rate will be different, of course. It depends on the market and a lot of other factors determining what your rate is. But if we're going to look at the interest rate, we're going to look directly at that. We're going to look here. Rate lock. Is the rate actually locked? In this case, it's not, but let's just say it was. If the rate's locked, that means that's the rate you're getting. And there would be a date listed after the rate lock that lets you know when that lock is good through. You want to make sure that if the rate is indeed locked, that the expiration date of the lock is after your closing date. A lender locking an interest rate for you that expires 2 weeks before your closing date on your contract does not help you. You need a lock that's good through at least your closing date, preferably just past your closing date, so you know you're covered in case there was any sort of movement of that closing date. So you're looking at the rate, you're looking if it's locked or not, you're looking if that lock is good through your closing date. Those are things you want to look at when comparing your loan estimates between lenders, because if one lender is quoting you a lower interest rate than the other, and the low interest rate is not locked, but the locked interest rate is slightly higher, well, it's likely because the lower interest rate lender can't actually deliver that interest rate. And when the time comes to get a locked interest rate on a loan estimate, it's not going to be what they're showing you up front. It's a common trick that lenders will use, and it's not the right way to do business, but it's a common trick they'll use to do what is called a bait and switch. They'll bait you in with a low rate and they'll switch it up for you later in the process when you don't have enough time to go elsewhere. So you need to be careful about that. So you're checking the rate, you're checking whether it's locked or not, how long the lock is good for. You really can skip everything else on this first page when shopping lenders, only because a lot of it deals with your taxes, your insurance, the cash to close. But the cash to close is determined by all of the other costs involved with the purchase outside of just what the lender charges. That's your cash to close here. That's not just what the lender is charging you. It's a lot of third-party costs that are going to be exactly the same whether you work with one lender or another, because it's the same third parties who are involved with that purchase. Now, here's what you do want to look at. Page 2 of the loan estimate, box A. So box A are origination charges. Origination is the loan. So those are charges that are specifically from the lender. Everything else on here, box B, box C, these boxes here, E, F, G, are not lender specific. And therefore, you don't want to get caught up on what's in those boxes at this point in the process, which is shopping lenders and comparing your loan options. You're going to look specifically at what the lender is charging. So in this case, the total lender charge is only $1,095. Now, if you get another loan estimate and you're comparing it side by side with this loan estimate, and the other lender is charging you $2,000 in box A, well, and the rate's the same as on both loan estimates, well, you know that this option, which is almost $1,000 less, is a better option. It's really that simple. One other thing you can look at, which could play a part in making this decision, would be box H. Now, there are times when the lender is giving a credit, it's called a lender credit, toward the closing costs. That would show in box H. It would be right here under this title charge. It would say lender credit, and it would reference a number right here. That number would be deducted from anything in box A. So let's just say, hypothetically, that there was a $500 lender credit here. That would mean I would deduct $500 from $1,095, and the actual lender charge would only be $595. Right? So you want to look at box A for the charges. You want to look at box H for any sort of credits that might be applied. Credits will not be on every loan estimate, but there will be charges in box A on every loan estimate. So make sure that's what you're looking at on top of the rate, on top of the lock period. That's the type of loan, right? It's very important. You want to make sure, and I should have said that before, on the first page of the loan estimate, you also want to look at the type of loan. You want to make sure you're comparing apples to apples. Loan term. Is it a 30-year fixed rate mortgage? If you're looking for a 30-year fixed rate mortgage, and one loan estimate has a 30-year fixed rate mortgage, but another loan estimate has a 5-year adjustable rate mortgages, and if you want to learn more about the different types of mortgages, such as fixed rate and adjustable rate, balloon mortgages, make sure to check out my video that specifically gets into detail on those types of mortgages and how they actually worked and which would be most beneficial for you. However, you want to make sure that you're looking at the type of loan, the length of the term. You don't want to compare a 30-year from one lender to a 15-year from another lender, because the shorter the term, the lower the rate. So it's not going to be a fair comparison for you or for the lenders. So you know to look at those things. As we said on page 2, you're looking at box A, you're looking at box H for credits. You can also look at the APR. APR, annual percentage rate, which is not the actual rate that you're making payments on. The APR factors in costs involved with the purchase, such as lender charges, discount points. It also factors in mortgage insurance if the loan is going to have mortgage insurance. You're putting less than 20% down, or if it's an FHA mortgage. That's important. The higher the APR typically would indicate the higher the cost for the loan. Now, comparing offers simplified. There's a lot of information on a loan estimate. Maybe you're gonna have a hard time just looking at box A and box H, as I said, because you just get caught up in all these extra costs. You have your family members in your ear on, oh no, don't listen to them. This bottom line is $4,000 less than the other one. This is the cheaper one. But meanwhile, box A and box H are lower for the lender with the higher overall cash to close. How would that make sense? Well, that's where you can use this trick to allow you to determine which option is best in under 2 minutes. Now, everyone talks about AI, and if you're familiar with ChatGPT, this comes into play. Now, you're going to have your 3 offers in this example. So we have offer A, $500,000 loan at 8% interest rate, no discount points. What are discount points? Check out my video on discount points. I'm going to explain those in detail, when they should be paid, how they're paid, what they are they beneficial? Make sure to check that out. But no discount points in this example. $2,500 in origination fees. That would show in box A on page 2 of the loan estimate that I just showed you. Offer B, same loan amount, lower interest rate, but paying 2 discount points, slightly lower origination charges. Offer C, same loan amount, slightly higher rate than offer B, less discount points and a lower origination charge. You might look at this and say to yourself, obviously the best option is offer C. But is that definitely the case? Well, you need to figure that out. And the easiest way to do so is, as I said, with ChatGPT. Now, you want to make sure you're using ChatGPT 4. It's the most up-to-date. But I can enter my question in on ChatGPT simply and let ChatGPT do its thing. So what I asked was, what mortgage deal will save me the most overall interest on these 30-year fixed mortgage terms? You have to be very specific with the question you're asking and what you're asking to do with the review of the offers. You might need to reference, I only plan to stay in the property 5 years, or only plan to stay in the property 2 years, or whatever the case may be. You want to get very specific because the answer it's going to give you is based on what you're entering. So the answer is only as good as the information entered. So I was just very clear, I plan to keep this property, so I'm only asking on a 30-year fixed rate mortgage terms, which of these is going to save me the most interest? So it's giving me an answer now. As soon as calculation, it's going to save me tons of time. So I entered that maybe 30 or 45 seconds ago. It's already coming back with the answer. And not only is it coming back with an answer, it's not simply saying, yep, go with this offer. It's explaining why I should go with the offer, right? So use ChatGPT as a hack to compare your mortgage options. Don't feel like you have to do it on your own. If you're not great with technology and you're trying to compare options and you already have some offers on the table and you want me to take a look at those for you and determine which would make the most sense based on what your goals are with your home, comment below with your question. I'll reach out to you directly and I'm happy to review the offers for you. So for more tips and tricks like this one on the home buying process, make sure to subscribe and I'll see you in the next video.